So today we're gonna be discussing on what is a DeFi, decentralized finance. Let me try to share my screen. What's the best way to share my screen? Window, airdrop. Let me see what entire screen. No. Chrome tab. No. How can you share your window here? Share entire screen. Is there a way to share your window from your iPad? I don't think there is. Let me try to see. Okay, I do. Okay, so today we're going to be discussing on what's a DeFi. What exactly is a DeFi? Decentralized finance, which is an umbrella term for financial service that operates on a blockchain. So, what are we basically saying? What's a DeFi? We're saying compared to traditional banks or maybe other functionalities of centralized finance that are being offered by a bank. Let's think in traditional terms in finance services like lending, borrowing, maybe trading. You know what you do with forex, investing came through Bitcoin system. Insurance, I'll tell you this how this will apply to insurance. We can relate insurance in terms of premium insurance and other things. And in addition to traditional finance, we eliminating central brokers. Let's say in trading, we have a liquidity pool where people can trade for exchange tokens through TRS, other platforms like what do you call it? Uniswap, where you can create a stable coin. You put liquidity in it. You gain value. Something. The use of a market maker to do all that. So how it works? Instead of relying on banks to approve a loan, DeFi uses smart contracts. So in this particular instance, we just have a code which abides to some certain rules, which we tend to be smart contracts. Smart contracts are code that is executed on the blockchain. These smart contracts are automatically executed on the blockchain, and the blockchain is more like it's an architecture where we have platforms, Ethereum, which is the Ethereum virtual machine that enables smart contract execution. And because it's a decentralized function of finance, that means that individuals are incentivized through gas fees so that they can execute transaction. That's where the concepts of miners come into play, and that has a lot to do with blockchain itself. Today we're going to focus on, let's assume that you know what a blockchain is. Now I want to explain what decentralized finance it is to you. What are key benefits of DeFi, decentralization? So in terms of decentralization, what we are basically saying is that no single entity has control, right? No single entity has control over this. That means we are able to have transparency, is every transaction are recorded on the blockchain. So this is the benefit of a DeFi. Global access. Anyone has with internet connection has access to decentralized finance. So in terms of financial inclusion, this is the key, is it brings the unbanked into the banked world. So when we say unbanked, we're saying people in rural areas, they do not require a KYC, know your customer requirements to be able to send funds, although this has to do with jurisdiction, in the sense that there are regulations in place so that people don't launder funds around the world. That's why it's still in its early infants, or in its early stage, and people are not allowed to just send money from anywhere. But this allows people to do that if you've got a smartphone and a MetaMask wallet, and you got a crypto deposit, and you're able to send funds without the need of a KYC account and without using the Swift, and it can be done in minutes. Transparent, since the transaction on the blockchain are visible, that means everyone can see them. That means it ensures accountability and trust. Reduce the fees. Okay, so you see, banks, you do not interact solely with the bank because you need the bank gives you money. A transaction involves, in this particular instance, in a traditional finance, a transaction involves three people: the one that is giving you the money, the middleman who is handing you over the money if they are not physically available to you, and you, the one who is getting the money. So if we do decentralized finance, then needs a fee to transact that particular amount. So let's say you're sending $20 to your homie in Africa. You need to pay a fine, a additional fee for transacting. That is the fee of sending and the fee of receiving, and also the transport cost for that particular asset that you're sending. So the use of a DeFi streamline the process such that the middleman is eliminated. When the middleman is eliminated, we've got reduced fees. What else? What can a DeFi do? We can lend and borrow assets. You can lend crypto and interests and return the capital you've borrowed. You can also deposit your crypto if you are not yet using it. You can deposit your crypto. Somebody could lend, you could borrow your crypto, and you earn interest through that. So we bring financial services that were not previously interest. I'll tell you a very good example that be shocking to you, is that when you go to the bank, especially in my country in Africa, if you go to the bank and you try to you deposit $100 into your bank account, they will charge you something like $5 to maintain that current account for every month. So if you deposit $100 and do not use it for the next 12 months, you gonna your money, which is in current account, is gonna deplete, or it's gonna be deducted with the fees. But in assets now, in if we come to centralized finance, where you can store value in form of stable coins, which are USDT and DAI, and other assets like USDC as well, can offer you that. You can trade assets that exchange through decentralized exchange like Uniswap, allow you to swap token directly. So Uniswap allows you to swap tokens without any intermediary. Like if we would come to a traditional finance, you would discover that you needed an exchange, or a bureau de change for you to exchange from. Let's say, for example, in Zimbabwe, you want to go to South Africa, you need to exchange to rands, you need your USD to be exchanged to run so that you would be able to purchase things in South Africa. You need to go through a bank, make an exchange, get the exchange fee and the interest rates, the rates, which is how dollar is performing to rand, and you make a transaction. You need a third party. But with decentralized finance, like this DEX, which is a decentralized exchange, you do not need a third party. You just directly swap tokens from one token to another on a smaller fee. And there's a way for you to earn money through yield farming, staking. You can earn returns by providing liquidity to the DEF protocol. This is what we said. Even if you have got $100, you can take $100 and it ends in an interest, let's say 10% per year. If you stake $100, that means after 12 months, you'd be able to receive $110 compared to a traditional bank where if you put your $100 in the bank for a year, you'd say five times $5 the service fee for keeping your account open times 12 months, which translates to something like uh, let's say 5, 10, which translates to $60. So by the end of the year, you would roughly have $40 in your account. So you can see the benefit of a DeFi or yield farming or the lending protocol. Stable coins uses stable coins like DAI, which is a cryptocurrency pegged to a stable asset, like US dollar. This allows to avoid the volatility of cryptos and also enjoying the benefit of a DAI. Let's come into play with things like so in summary, we are saying decentralized finance, it transforms the landscape for with removing intermediary and offer more control to individual. It's open, global, transparent, and consistent all over the place. And so whatever you are looking for, be it borrowing, lending, trade, any interest on crypto, DeFi is rich. DeFi. Thank you very much. Stay tuned for more.